Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. The world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hey, it is what? Thursday now? It's Thursday. We got PPI though. Well, let's talk about what happened yesterday. I'm not too pleased with how things turned out yesterday. So, volume profile. So we had a pretty big spike on that CPI with suggestions that inflation is peaking and that the Federal Reserve will soon pivot. But then the Federal Reserve later in the day came back and pushed back against that narrative, and we retraced the whole thing essentially. 5-year came back, but otherwise, could have done okay if I had held my trade through it, but it was coming back on me too much, so I did give up that trade. S&P 500, though, loving that news yesterday. Good move up higher. Oil moving a little bit higher after struggling yesterday. Interesting. Gold and silver seeing some pressure, but still looking okay here. Kappa looking good. Really liking Kappa. We got Bitcoin. Well, okay, they've been all over the place. Yesterday, big jump off of the CPI news as well, but then a pretty massive pullback, right? But now here overnight higher, and the dollar continuing to see some pressure, which is good for our risk assets. So that's basically where we're at today. And I think that we got to keep an eye on the 2-year again. Seems like that's the place to play. But we shall see. Use the hype tracks today. Coming back over here, how you guys doing? Oh, let's make sure that we got our new squawk going correctly. Hey, I did okay getting here on time today, so we're ready. Now, as for PPI, US core PPI month over month, we're looking for a reading of spot 4, and I think we're going to come in line with that. If we're not in line with that, well, now the headline PPI, they've got spot 2. That might be 0 like the CPI, but I don't know. I'm not expecting a huge outlier here. Also note that we're going to be getting initial jobless claims looking for a reading of 264 versus a previous reading of 260. So that's going to be important. Also, we have a 30-year bond auction today. All of the bond auctions have been strong. So we got this weird situation where we might get strong moves, but I think I've learned my lesson from yesterday. Any strong move that we get is likely to experience significant pullback, especially if the move is up in treasuries, because it looks like the Federal Reserve is kind of getting to a spot where maybe they should be pivoting, right? But they don't want looser financial conditions because that could lead to more inflation. I think that they want the interest rates between 2.75 and 3. So this is the world we live in, and that could make it a little bit tough for us to try and swing anything. All right. So let's just wait. We got a few minutes here until the news. Good morning, Octavius. All right, here we go. Okay. Initial jobless claims 262. Oh my. US PPI month over month, negative spot 5% versus an expected spot 2, and core CPI spot 2 versus spot 4. So pretty good numbers. I think the S&P 500 is going to take another big climb. Treasuries are kind of middling around here, not necessarily immediately just jumping out here. I mean, they did have decent amount of movement on the upside to begin with, so that bid in the 2-year is correct. Okay, big bid just showing up here in the 10-year. Somebody fills him. I think the Federal Reserve is in a jam here because before, I think that we were in a situation where, the data supported that the Federal Reserve needed to be heavier handed and the market didn't seem to really want to go along with it. Now it's the opposite. The data suggests that the Federal Reserve can back off. The Federal Reserve doesn't want to back off. What are they going to do? The market force them? That is about as strong of a number as you could get with the PPI, though, in terms of like bullishness for equities. The problem is the Federal Reserve is saying, we're going to need multiple months of this cooling off. But that was such a significant cool off that I really have a hard time seeing them. We'll see. I really have a hard time seeing them being able to push rates into the 3% now. I think September is going to be a 50 basis point hike. That would be 2.75, right? And then maybe you're due a quarter after that. So maybe we could be at 3, right? But I just don't see how you justify more than that. The treasuries might go back and forth here, and we might have some really confusing trade. But I do think that we're likely to see some steepening. So let's see. Let's kind of let them sort it out here a little bit, okay? Not looking so hot. Okay, Paul. Why would these numbers be bullish for equities and/or cause steepening? Okay, so the reason for the steepening here really comes down to we're just so flat, right? And the issue is that it's very questionable that the federal funds rate is going to get to 3.25 now at this point. Next hike is likely to be a 50 basis point hike. That would put us at 2.75. And then another hike after that in November would be, 3. So you don't get to 3.25. You get to 3. So does that justify the 2-year being at 3.15? Not really. So probably the 2-year needs to come down here a little bit. But the 10-year, which is it's seen strong demand as of late, is at 2.75. That's just a really, really wide spread that I think needs to come back. Man, the treasuries are puking hard though. I'm gonna have to puke here, I think. Now it's bullish for equities because that means that these scenarios where interest rates go to like 4% and stuff are definitely off the table at this point, I think. Like if the inflation numbers were hot, then it would be a totally different story, right? We have this one data point that's just extremely important. I know it did look bullish for equities, but it kind of came back. Maybe they're saying that they just with the CPI and everything yesterday that is just too much. I don't know. Treasuries, the 5 years maybe coming back a little bit. Which app am I? I'm using a Jigsaw Day Trader. If you go into the video description, I have an affiliate link for it that gives you $100 off if you're a new customer. So that's primarily what I'm using to watch the order flow. I also have some of my own charts in NinjaTrader, and you can get my indicators at speculatorset.com for a lifetime license, $100. Yep, putting on a steepener would make sense. Short 2-year yield and long the 10-year yield. Exactly. No. Jigsaw Day Trader after my discount coupon is like $450, I think. Now it's $50 a month trade license too. That kind of sucks. But the initial entry price is actually a little bit better than many competitors. Okay, our spread in the 2-year is coming in here a little bit. And that was a pretty strong downturn here, but they are reverting now a little bit. Now I need to come over here. Do we have any Fed speakers or anything like that? Nothing's scheduled. But yesterday we didn't have anything scheduled either, and then we got a speaker. So hmm. See, like here in the 10-year, like 2.75, 2.76, that seems fine to me. But some of these other ones I think are too high. Problem is that the curve's going to move together, right? Hmm. Now, if I am concerned about the treasuries falling down here, I could take a long in the 10-year. It's actually interesting. The flow has really slowed down here, and the amount of volume that traded off of that is actually not that great. Hmm. Well, something's going on here. What about the Japanese yen? Well, now that's interesting. The Japanese yen spiked higher way more than the treasuries did. I'm also seeing some of these commodities move up. Corn is moving up. Oil seems to be moving up. Oil, one of the biggest winners right now at the moment. The euro moving. We've seen some really significant changes in the dollar here. Well, some signs of steepening, but you can't even hear the music, can you? Oh, that's not right. There we go. Well, I have to say that the flow right now in the treasuries looks a little confusing. It seems like you're getting a hard sell in the 30-year and buying on the shorter end of the curve. So I do think we are getting some steepening, but see, like the 10-year kind of moves down, like we're gonna move down to the downside, and then it comes back. Bonds should be moving a lot more. I'm partial to your feelings there. I feel like the bond should be moving a lot more too. But the problem is that the trade here is just not. I've never seen this situation before, so I'm not 100% sure what to do. Right? Because it's always kind of been the case that the Federal Reserve is data dependent and all of those sorts of things. But basically what we got yesterday from the Federal Reserve, from Evans and from the Wall Street Journal story, is that the Federal Reserve doesn't care about this particular data point, as maybe we put it that way, right? In this particular instance, they're not actually data dependent, in other words. Right? They're saying, well, we need to see the next months and the next months, right? But really what's going on here is that they just don't want financial conditions to get loose, because that could bring inflation back, right? So what do you do in that situation? I don't know. I think that the steepener makes sense, but didn't execute it very well. So 10-year coming back to unchanged. Yeah, you're seeing steepening in the knob. I'm definitely seeing the steepening in the knob too. Like the steepening is the strongest in the knob, which is interesting. Probably the best trade here would be like a barbell here, right? So we could sell the 2 and the 30 and buy the 10. But you'd be losing money on the 30-year side of it, right? So things are going a little bit better for me. The thing that's going through my head right now is if having the spread trade on really makes sense versus doing something with the outrights. But I'm the more I think about it, the more I like the spread trade, because I'm, especially with the 10-year, I'm just not sure that an outright trade in the 10-year really makes sense here. Well, look at that. They got smacked down there. The 10-year was looking really, starting to look good back to the opening price, and they just got smacked back down. Yeah, the long end of the yield curve is getting a little silly here. Like once, so we are getting steepening. We are getting steepening, but basically the way that we're getting it is by the 30-year selling off, or rather 30-year rates rising. How that does not make sense at all, does it? That does not make sense to me at all. But that's what's happening right now, so the flow in the 30-year is really... Let's say something in Discord. See here, I could choose to bail on the 10-year side of the spread, right? And then I would be better positioned for any side of upside movement here if they do move higher. But having the spread trade on is a little bit safer. I think that it's better for me to play it a little bit safer today. There's a tendency for the Fed to listen to the market. The market is calling a pivot. Fed speaker says otherwise. Yeah, I don't think I've ever seen a situation like this before. It's hard for me to say what's going to happen. And you can just look at the flow. Like Octavius was saying, there should be way more volume in the treasuries right now than there is. And I think that suggests that the speculators don't know what to do about it, right? I'm going to tweet about that. Look at the 10-year, man. Look at that. Okay, so now are we positive off of that? No, not quite. part of that is because the numbers we're getting here aren't very. The spread in the 2-year came back out. Look at me talking like a crypto nerd. What was the hell? I don't know, man. Like, they got smacked back hard, right? It was bond market specific too. It was, yeah, it was a, I know what you're talking about. When the 10-year went from like 4 all the way back down to evens again. Yeah. When they went from there all the way down to there, and then they started moving back up. Well, I am starting to see the steepener come through for us now. By the way, S&P 500 still on the up. S&P 500 is liking this regardless of what the Federal Reserve is saying. The bond market is all sorts of confused here, but the equities, they think this is good. Can we see 4250 today? Where does that put us on the by the way, what do you guys think of this style of music? It's a much larger playlist, and it's a little bit more upbeat, and I'm kind of liking it. There's nothing on the daily chart that would suggest anything unusual about 4250. You have to wonder if there's some change in options there at those big even numbers, though. You know, every 50 points, especially. Now at 43, that's where there was like significant resistance. So man, this is all a very, very interesting flow. I think so normally the treasuries tend to move together, right? It's like they'll all move up, but one side will move stronger than the other, right? A situation where one side of the curve goes this way and one side of the curve goes this way, very, very rare. I've seen it like twice, and it was only for like individual moves, and it was because somebody was taking a really massive trade, right? But right now, the market seems to be there's a lot of confusion here, I think, and you're starting to see that. You are starting to see that the 30-year is just straight up selling, and the 5-year is tepidly long. So in other words, I'm getting a situation where I might, with my steepener trade on here, it's still tough because, you know, like there's a big spread and everything here in the 2-year and everything. So we're not going to say that I'm making money right now, but there's a possibility that I make money on both sides of the spread. Like if I go for just $10 on each side or something, I could make money on both sides of the spread. But what happened there in the 10-year was really interesting to me. It wasn't, you know what though? Octavius, was it Octavius? No, it was Sharp and Goose that was saying this. Like there was a big drop there in the 10-year. It was way harder in the 30-year, right? So maybe somebody puked in the 30-year. That particular tick wasn't, I didn't see steepening on it as much as I'd like. I'm gonna wait 30 minutes after this snooze to get involved. Something has changed. Yeah, definitely. Well, so let's just recap for those of you guys that maybe weren't here at the very beginning. But yesterday we got a really under expectation CPI, consumer price index report. So inflation was significantly less than what the markets were expecting, and in fact, the headline number was 0. So Joe Biden came out and said inflation this month was 0. Okay, and so equity markets really took off after that, and the treasuries bought up pretty strong too, and we had a good 10 basis point move in the 2-year, for instance. But then the Federal Reserve came out and said, well, Evans spoke, and Evans didn't really say anything too significant in her speech, but the market basically, their take on it was that they're still concerned about inflation and they're going to work to deal with inflation. Okay. Then later, the Wall Street Journal put out a story with Nick Timiraos, and they said that the Federal Reserve is unlikely to pivot unless they've seen multiple months of weakening inflation. Okay. So when that happened, the bonds gave up almost all of their gains, and the 30-year in particular ended up lower. Like the price was lower on the 30-year. Was like, what? Now I hear you seeing it this morning. Like they're selling the 30-year super hard, which doesn't, that trade doesn't really make sense to me. But like whatever, it is what it is. It is what it is, right? So now we get PPI. PPI was similarly low inflation, and there was the knee-jerk reaction on the news. The treasuries did the correct thing. They all moved up, but then afterwards there was quite a sell, and we are seeing a little bit of selling here on the curve. So it seems that the traders are trying to stick with the Federal Reserve on this. That they're saying, oh well, the Federal Reserve wants rates higher, so I guess we got to sell here. Now it is steepening, so the yield curve is doing what we would expect, and so because of that, I'm in okay hands, except for that the 2-year spread still sucks. But been a sick week for me, intraday trading and swing trading. Happy? Oh, when you say sick, you mean you've done really well, huh? That's good. You know what? This is something that's been really funny. I mean, Discord has been somewhat quieter these days because it is the summer, and it's usually quieter in the summer. In fact, we've had periods in Discord that have been quieter than this. much quieter. The interest rate channel tends to be really quiet because Alligator takes a vacation, right? But some of the other channels have been a lot more active than they usually are. But there's been this person going around on Discord being like, hey, like a lot of members have been losing money. How have you been doing? They've been trying to impersonate me. But like the funny thing is that people are doing really well. Like a lot of our guys are doing well right now. This is an environment where you can do really well from the speculation, right? Okay, so the 5-year took a little bit of a hit there when they dropped below 26.5. But it seems like we're doing okay. Man, the 10-year really sold there. My perspective, Forex perspective, a lot of news seems priced in yesterday. The Great British Pound and the USD had a single 1-minute candle bigger than one every 1 hour candle the full day during CPI. Then it just chopped around for the next 8 hours. Wow. I didn't catch that they moved that big yesterday. Oh yeah. A pretty big move. Well, I tell you what, it sure is a weird trade here in the treasuries, ain't it? Okay, so it looks like the flow is turning back up here a little bit. When they took the pressure off on the 30-year, they popped up there pretty easy back to 142 even. I kind of wonder there with the 30-year because again, like them selling in the 30, that is not what you expect. I'm wondering if we did have somebody puke there, right? And so now it's kind of turning into a self-reinforcing sort of deal over here in the 10-year, or sorry, the 30-year. Yeah. I think my mind is kind of racing all over the place at the moment. Brannigan and Barrett, the correlation with... Oh, wait. Pay attention to the VIX. Until that turns, no point fading risk. Note the term structure. 1 month, 3 month VIX green is steadily been increasing from inversion to new high for the year. In simple English, no one is hedging in near term as everything is A-OK until the data says otherwise. The correlation with SPX is strong. 4,300 is target in the near term, and given the current environment, it's best to step out of the way. Yeah, I am kind of wondering if the equity indexes are eventually going to get sucked up to get sucked up to 4,300. Do you journal, Seth? I mean, isn't this kind of my journal? I should probably write down more than I do, but one of my major flaws, I don't journal my findings and rely heavily on memory. Yeah, also the issue that I have found with that sort of thing is that there's just too much information. You know what I mean? Like if I really kept a solid record of, whoa, what was that? A large bid at 120.015. Somebody flashing a 5K there. That Well, I'm not sure what to do about that. What just happened there? I think that they're given a warning that they're going to make a push up. Anyways, so if I had a good database and I was like writing my notes every day, like how would you parse through it? You know what I mean? It's just like there's just too much information when you're doing this every day. So kind of what ends up happening with me is like if I get a situation that really strongly reminds me of something else that happened, I can find the date and then I can go back in this and I can just watch the video, right? In other words, I just keep everything. And all of the trades are saved on Journalytics, right? You'd end up with a book set that you could publish if you wrote down everything. Yeah. Well, all of the YouTube videos I stripped out. So I've got a short book scripted out in from the YouTube videos that I can expand upon, and that's what I'm going to turn into a book. What the heck? NBC News tweets, the World Health Organization warns people not to attack monkeys amid the monkeypox outbreak. That is the thing. Anytime that there's a virus, like whatever the group is that's associated with bringing the outbreak gets attacked. I wonder if that's like a natural human behavior. It seems like it always happens. Have you thought of doing a Kickstarter for the book? Oh man, no. That's not something that had ever even crossed my mind. I can't. Man, I don't know if that would actually work. So like, here's the thing. Let's do some math, okay? So for me to like quit my day job, I think I'd probably need $100,000. Okay, so we'd need a Kickstarter to be like $100,000, $200,000, right? So if we divide that by, let's say that we charge $350 a pop for the book, right? We'd need a little under 300 backers. Now we have 8,000 roughly YouTube subscribers. Oh, let me bring that back up. So 300 divided by 8,000, it's about 3%. 3% is too high of a conversion rate, even if we were able to get everybody on the YouTube channel to see it. So I don't think I could hit those numbers. Not with the way the performance of the current channel, it'd be very difficult to make that Kickstarter work. But like, here's the thing. I don't know if it's necessary. Well, the reality is that I can just bootstrap it. I can't afford to work on it full time right now. It really sucks, but slowly but surely from the YouTube channel, we're getting the pieces. And as we're doing that, we're learning what kind of messaging, works the best for people, the best ways to explain it, to understand the most engaging ways to explain it, etc. Trading strategies. I really could market that to noobs as an ultimate resource list. I wish I compiled all the research and bookmarked my search history. I could repackage it and sell it to a noob as a resource list over 6 years reading articles, research. Yeah. Well, and the thing here is, like, here's the crazy, well, not the crazy thing, but the important stuff is here on the YouTube channel. I mean, I have videos about all of the important stuff, except for the oddities and nuances around the treasuries. Now I got a lot of that with our micro treasury yield futures video. Like that video was like the basics for you to be able to come in and like have some confidence in like placing some orders and stuff, right? The next video, where I'm talking more about the kind of the news cycle that happens with the bond market and how they react. And then after that, I'm going to go a little bit more into detail about bonds themselves. A little bit more detail about bonds themselves. And, you know, the things that go into the pricing of bonds. Once we got all that stuff, once we got all of that stuff out, like, you really do have the most important resources here on the channel, right? The key things that you would need to be able to, you watch all of these videos and then you go out and you start trading, right? Like I think of it as like, here's all of the things that you need to know to set you on the right track so that when you start watching the markets, you kind of know which way to go, right? But it won't put the experience in you. You're still going to have to trade for years, you know, figure everything out and everything, right? But if I'm able to make a book and expand upon it, I might be able to expand the book enough to give you kind of more of that intuitive context around some of these things to make, you know, so that reading the book is equivalent to those years of experience. You know what I mean? So if we're asking $350 for it, you got to get some return on it. But I think that to get a return on a $350 book is quite easy in trading futures, right? So you need to collab with people you respect, like yeah. I have a list on that as well. So here's the problem that I've had, David, is I can't necessarily find contact information for people. Maybe you guys could help me with that. So I tell you, there's a guy on Twitter. His name is Fed Guy. Do you know who I'm talking about? There's a number on it. I think it's like Fed Guy 12. Yep. Fed Guy 12. Joseph Wang, Fed Guy 12. And he has a book that he wrote about central banking 101 is what I think it's called. Right? This guy is whoa. Okay. And Joseph Wang was a senior trader on the New York Fed's trading desk. So yeah, I really want to talk to this guy. I really want to talk to this guy. But I can't find an email, and you can't send him messages on Twitter unless he's following you. So I have no way to contact him. Otherwise, I would be trying to set up an interview right now because I really want to talk to this guy. So if one of you guys know him, or you could, you know, I'd really like to talk to him. Man, I tell you what. So in the 10-year, the reality is that we're trading like an 8-tick range here. But every time that it goes across the range, like the level 2 just goes crazy. Like they all look like it's going to fall through LinkedIn. I looked on LinkedIn too, and I couldn't find him on LinkedIn. But LinkedIn is amazing. LinkedIn is amazing. There are some people that I would like to interview. Like, I think that what's going to happen is we'll do these next 2 videos about bonds. And right now I'm doing like a video every 3 weeks because it just takes me so long to write them. These ones, there's a lot of thought going into these videos right now. And then I think what we will be switching to is interviewing people and current events. So like if there's something that week going on, you know, an interesting market happening that we can talk about, and we can make a video about it, right? Otherwise, we put out a interview video or something like that. You get what I mean? Maybe in Twitter Spaces? Which Twitter? So here's the thing I don't get about Twitter Spaces is that there's not like a... it doesn't seem like Twitter Spaces is built into TweetDeck. So it's like in order to see... in order to see the space, it seems like you have to be on the actual space page in Twitter. So I don't know how that works. Let's see here. TweetDeck Spaces. Let's see what they get. What do they got here? Create a list of guests who are people who share your spaces and consent that use your hashtags. Then make that list a column. Use the search column to find relevant tweets in your space. Like, so TweetDeck made a tweet here. Oh, you could totally use TweetDeck to help you with your Twitter spaces. And then the one response to it is, looks like we can't run a Twitter space from TweetDeck? ? And they didn't respond. Because that is exactly what happened. I'm a part of at least one space, right? Okay, so yeah, the 30 year is making another push down and the treasury is getting dragged along with it. The 5 year isn't going quite as hard. Call him out on live TV. Yeah, I mean, like, the thing is I could just tweet at him and say, like, I would really like to speak. But I don't think he'll see it. But there are two guys that I do have that I can contact, maybe three, that I would love to talk to. So we might get that. But like, that's a problem, is that and like, here's the thing that's frustrating about the Fed guy 12. Okay, so here's where you guys got to help me out, because I don't know what I'm doing. I'm clueless about this sort of stuff. He's done a bunch of podcasts. Like, he was on some of the major Spotify podcasts and stuff like that. So there's some way to get a hold of him. I'm just not sure what the method is. You never know until you try. Okay. At Fed Guy 12. Okay, how can we see that? My YouTube viewers really want me to interview you, I guess we can say. With a private message here on Twitter, I'd really appreciate it. There we go. Okay. I tweeted it at him. We'll see if we get his attention. Okay, so once again here we saw the rates rise on the long end. The short end didn't really move. I mean, the short end did go up, but not by very much. I think though that still puts us so because I executed this so poorly, I basically started down a basis point. And it looks like we're just barely like break even right now. So, but yeah, I've been developing a lot of contacts with the quantitative finance guys, so we can do some interviews with them. One of the things that's happening to me, man, I gotta tell you what, I could definitely make this a full-time job, guys. just you guys, the YouTube channel, I could definitely make this a full-time job. But a lot of it would be like reading books, right? Like there's some of these guys that I just, oh man, they're just so knowledgeable, amazing guys that I've come across on LinkedIn, and like they're putting out books, but like they're big, complicated books, and you know, if I wanted to interview them, I probably should read their book first. You know what I mean? Man, them 10-year treasuries just getting bodied here. So the 29.5 is not a new regular session low yet, and we should note that overnight they were as low as 24. So like if they decide to go for lows, like there's plenty of downside opportunity. We need to get a bunch of guys to buy in the 2-year here so that they flip the spread on the other way and it's more in my favor. Because right now what they're doing is if you want to sell, you're getting a fair price, and if you want to buy, the price is awful. So if you all bought in here, you're like really paying up. Meaning that if I want to exit this losing trade, I have to pay up, right? I guess if a bunch of people bought there, I don't know if that would actually flip it the right way, but a little bit of iceberging down there at 32, 30 as well. It really makes me wonder what it will take for this spread with the 2-year to come back in line, because it's a little zany. The spread is actually decreasing, that it's flattening out a little bit, so it's not necessarily very good. Good move up there. 5-year is outpacing the 10-year. Anyways, and we could work with other influencers in this space, but the problem there, because there are some people in the space I would love to work with, but I don't even know what I would even do with them. You know, I think one of my problems, again, is that I'm kind of a consumer of my content to some extent. Is like I look at that and I'm like, okay, what are the things that would have been the most useful to me when I was, you know, and there's a lot of really basics that I'm kind of like, well, but like that information is everywhere, you know, how to calculate your expectancy, that information is everywhere, you know. So if I do a podcast and all we talk about is expectancy and risk management, it's like, well, would the viewers really get that much value out of that? You know what I mean? Because I see some of these things that they're doing. It seems like, well, like for instance, the stuff that Anthony is doing with Futures Trader and Edge Clear. Great videos and everything, but they're not interesting to me because I've heard most of the stuff they talk about before, you know? So that's kind of the issue there. Now, if we was all going to talk about interest rates, then that would be a different thing. But then it's like, well, really, we should be talking to influencers that are specifically about interest rates. But like, I'm like the only one. No, I take that back. Jim Iurio, he also talks about interest rates. He's been like dead wrong about a few bad. He's had a couple of really bad calls lately. But hey, he's interest rates. I would love to talk to him because generally he has some wide experience and knowledge that would be really valuable to us. But again, don't know how to contact him. So guess we could tweet at him too, but like one at a time. Let's do one person at a time, okay? So let's see here. Yeah. Treasury's pulled back here a little bit. Curve not really moving or helping us much. So far though, we're not really getting any help in terms of, you know, the 2 years should come back down below 3%. It seems that they're more concerned about that the 30 years should come back below 3% than right? Oh no, wait, but they're not going down below 3%, they're going up. Make it make sense. No, it's the orders. I'm just not 100% sure why the orders are going the way that they are. Not entirely sure why the orders are going the way that they are. They've been hanging out at 29.5 for a while, but they just kind of been nibbling at it. Maybe they break. I'm a little worried that if they break a lower here, 29.5, that there could be a little bit more aggressive of a slip, a little stop run, if you will. Yeah, I don't like the the whole basis point spread in the 2 year at the moment. It doesn't make much sense. It's kind of funny, like given the circumstances, it seems like it makes a lot more sense to try and play it on either the 2 or the 30 rather than the 10. But who knows? This could turn into some like super downtrend bender that really surprises people, and then the 10-year would probably be a better place to be, right? S&P 500 doing a little dive here, huh? Oh, do I not have a Vista chart open here for the... Yeah, no, I do. It's just this is not showing up. Yeah, it's a decent amount of sell volume too. Decent amount of sell volume too. Ugh. Now I don't want to name names, but like one of the other things that will happen to me is that I will have people that will reach out to me. Some of them are really cool, but it's like they're kind of divergent. So I don't know if we would do content together at the moment. Like you guys probably wouldn't care, right? There's other people that contact me about doing collaborations, and I'm like, no, I don't want to be associated with that. And it seems like it's happening more and more. Or like freaking, oh my gosh. This is the one that just I think is just absolutely hilarious. Is that I'll get guys want me to do like sponsored videos or whatnot. And it's like, hey, we got this new technical analysis platform where this robot does all of the technical analysis for you or things like that. They'll try and make it seem like they have their whole own platform when really it's just something built on TradingView. Like, no. Do you guys not watch this channel? Like, maybe you should look at the content before you make a recommendation. Before you try and reach out, because my whole channel is basically explaining why that sort of stuff doesn't work. Like, what's with these people? What's Anthony say here 20 minutes ago? Remember, patience comes naturally if you are prepared and know what you're looking for. Don't search for reasons to get in the market. Let your strategy force you to get in. He says that a lot. The spread may be coming back up here, but kind of seems like on this pullback or move up that the 2-year is moving a little bit more. The 5-year is moving a little bit more, but it's only by like a tick, so. So now I'm kind of starting to wonder, are the treasuries going to do anything meaningful today? They kind of seem like they're putting up a little bit of a fit here. You know what I mean? And like they don't, they had their little move and then everybody kind of threw their hands up and are like, well, I don't know what's going on here. Oh my gosh, what the hell? So on LinkedIn here, there was this guy was making this argument that we see a lot that, oh yeah, technical analysis doesn't work, but it's really good for risk management. You've heard that argument a lot before, right? How does it help your risk management if it doesn't work? Right? Oh, okay. If it goes through here, I don't want it anymore. But what information do you have that suggests that a move beyond that particular point has any significance at all? Explain that to me. You get what I mean? So what I said was like, well, you can use volatility to figure out what your stops and targets should be. But to sit down and say like, here's this point at which it is or is not likely to touch is nonsense. It's nonsense. He's like, I don't get it, but best of luck. I was like, okay. I don't think you know what you're doing. So you believe that ATR or standard deviation is no good for risk management? Well, I don't think that you want to use standard deviation, no. So yeah, like here's the thing. There is empirical evidence that volatility clusters. So you could potentially use volatility in your trading to set stops and targets. It's going to be more complicated than like what is the standard deviation of the volatility and yada yada yada. You have to read Nicholas Nassim Taleb's books to understand that stuff, though. But the because markets exhibit fat tails, you got bigger problems than that, because you're going to have a situation where the range where the realized volatility is significantly higher than the implied volatility and vice versa. Okay, like you get big outliers from them. When you look at it, well, I don't know if I still have the picture. Got a picture of where we did implied versus realized volatility. Ooh, that's a strong move up. Yeah, you could be using the Greeks instead. I'm just saying, like the bigger thing here is that that's not what technical analysis traders do, right? Technical analysis traders look and say, hey, for some reason, price keeps coming up to this one spot and can't get through it. So my trade is going to be that I'm going to go short. And if it actually does go through that price, then I'll get out, right? And like, it all sounds good in theory, but the reality is when you backtest these sorts of things is that it's not helping you at all. It's just noise. It's just noise. It doesn't provide any benefit. So if you're like, you can use quote unquote technicals in your trading, but you need to use technicals that have empirical backing, right? So this move here up on the upside looks a little bit more significant than the other movement that we've had, but volume wise it still just looks like noise. So I don't know about this one. We are still seeing the spread come, so and look, the spread in the 2-year has kind of come in a little bit. Oh yeah, do you remember when we were up here and there was like that big spoof? And I was like, well, I don't know what to do about that, but we just kind of ignore it. It was at 0.5. So we're almost right back to where that happened. I guess the thing that I find so frustrating in the trading community is that there's like this huge gap. Okay. Like the majority of retail traders come in and they learn about technical analysis. So they know everything about chart patterns and the different types of moving averages and this price action stuff that they talk about. And it's all worthless, right? So meanwhile, so if you're a trader, you come in and you say, okay, I know, because Seth told me so, that technical analysis doesn't work and I trust him. Listen, we have a lot of resources that you can look at. Probably I think one of the best examples is Gary Norton's book, where he talks about how flawed technical analysis is. Okay. So if you come in and you say, okay, I'm not going to use technical analysis, then what do? How do I trade? Right? Well, there are a lot of stylized behaviors of markets, but and we have the resources and stuff for you to learn about that stuff, but it's really complicated stuff. And how a retail trader can use that stuff is kind of a little iffy. Like, we're not 100% sure how you do that, right? So there ends up being like this huge gap where you have guys that all they know is technical analysis, and so they can't really help you. But then what you got on the retail side, if you're not using the technical analysis, you have very little to work with, and you know that there's a lot out there, but it's just, there's nowhere to find it. You just have to figure it out yourself, And so there's always this huge gap where it's like, well, yeah, we really want to talk to other traders, but other traders have absolutely no clue what we're saying. Because they don't even have the underlying context to understand it, right? Oh, that's interesting. So quite a bit of volume started going through here at 120.00 half. I'm kind of looking at this and I'm tempted to like just start taking the legs off. Look at that. That was another strong sell. How are you guys doing over there, by the way? Things are we're a little lighter. We all okay? The book in ZT is super thick. Are you mean like more thick than usual? I mean, it's always thick, but the ZT is a weird one. Like, you can definitely, I mean, I'm sure that there are benefits from having the ZT up on your DOM here and like watching it and stuff, but the way that the orders work and over there are just like completely different. The analysis that you'd have to use would be very different. Why do you look at charts? Okay, so I use charts, but I don't use technical analysis, right? So why do I use charts? Well, because I want to remember what happened. And I do want to note current conditions. So I can use charts in some instances to understand what the current conditions are, right? Just as long as I don't make the mistake of thinking that those current predictions predict what's going to happen. Those current conditions could create situations where the market is likely or not likely to move big or not move big. You know what I mean? So if we just had a really strong, fast move, then if somebody else comes in and takes an order the other direction, it's going to be a lot easier for them to push price. And you could actually see a move that eclipses that original move if the two meta orders are equal in size, right? So that's a situation where the current conditions kind of tells you something about what could happen, but it doesn't predict the future because you still have to know that that large meta order the other direction is going to come in, right? So the flaw of technical analysis, or the great fallacy of technical analysis, is thinking that the past market data that we've received has any predictive value in telling us what the future market data is going to do. We need to look at things that are actually predictive of order flow, essentially, right? Predictors of order flow. And the predictors of order flow, I wouldn't necessarily call them fundamentals per se, but the predictors of order flow tend to be very different things, right? And they tend to be more fundamentally based. But so that's why we use charts, but we don't use technical analysis. That makes sense? Is that a fair explanation? Because people have been asking me that a lot lately. They're like, well, technical analysis doesn't work. Why do you have a chart up? I got to remember what happened. Another thing is that what you want to do, this is not the, there's two kind of sides here. Okay. Like there are three ways to trade. Basically, there's the informed trader, which is what I tried to do. There's the market maker, which is what all these robots do. And there's noise trading. Okay. So almost all technical analysis basically fits under the category of noise trading. It's possible to make money from noise trading, but the vast majority of the losses come from the noise traders. Okay. Now we're trying to do to be informed traders, right? Which means that we would want to know something that has some predictive value in telling us what direction things are going to go, right? Like we know that we just had some significant inflation data come out this week, and I believe that the treasuries are going to steepen a little bit because of it, right? And here this morning, that is what we have seen. Okay, with me so far? Well, the other side of that is the market maker side. And so I can't necessarily make money from market making per se, but I still, at the very least, want to keep track of what the market makers are doing, right? And the way a lot of how the market maker works is they come out here and they say, okay, I'm trading this asset. What's like a substitute asset? And like if that asset moves, then my asset should probably move too. And there might be a situation where my asset doesn't move and I can take advantage of that, right? So a lot of it is correlations. Yeah. So that's not technical analysis. At that point, all of the information that you're using to make your decisions is current. You're just comparing the current price of this to the current price of that. Maybe doing a little analysis of, okay, there was a move down. They both moved down. Which one moved down more? Okay, so spreads. Looking at spreads, right? So what I want to do is I want to have a lot of assets up so that I have a good idea of where all of the money is coming to and from and how things are performing relative to each other. So when I have my charts over here, I got, down on the bottom rows, I've got some treasuries that just kind of, they show me the spreads is the main thing that I look at over here, is these bottom data series, the spreads. But then I also look, I want to see what gold is doing. I want to see what the Japanese yen is doing. I want to see what the dollar is doing. Bitcoin sometimes. I want to see what all of the commodities are doing, corn, oil, etc. And then I do look at what the S&P 500 is doing. Now I do have some indicators on here, but what are the indicators that I have? What are they telling me? Well, the indicator on this 5-minute S&P 500 chart is trying to estimate the average positioning of the market makers over there. And this thing down here, Alice, this is just telling me based on the volume and the volatility what the optimal number of contracts to trade with at that time is. So it's a measure of opportunity in the market. And then over here, I'm looking at how is the S&P 500 doing compared to the NASDAQ? How is the S&P 500 doing compared to its recent volatility, essentially? So once I have a move that's beyond the volatility that we've been seeing, that's you know, I don't take a trade off of that, but it's just something interesting for me to note, right? And how much autocorrelation there is in the market, and that's what those are my indicators, right? So where in any of that am I saying, okay, here is support and resistance, or this bar was really big, so I want to, right? There's no signals in there. This is all just me trying to make sure that I understand what is actually going on in the market, so that I can compare that against the fundamental and predictors of order flow framework I have in my head to say, do I actually understand what's going on? Is this doing what I thought it was supposed to? And if I see something that significantly diverges from what I thought was supposed to happen, then I can bail, right? So yes, I use charts, but I don't use technical analysis. I'm lamping right now. I literally have no clue what's happening. Well, I think, you know, I look over here on our DOMs and everything, man. So we that move up in the 10-year looked encouraging, looked significant, and they just got smacked back down again, like super hard. It is trying to steepen. It's trying to steepen, but it seems like if you were trying to do a steepener, well, I don't know. So one of the issues is that you got like the 2-year and the 30-year are inverted, which is a little bit weird, right? Well, not, yeah. Like the 2-year is much higher than the 30, but then the 2 and the 30 are probably both higher than they probably should be in yield. So you would think that the trade would be sell the 2, well sell 2-year yields and buy 30. Okay, so no, that's not the one that you would want to do. The trade would be buy 2, sell 30 over here, which is the opposite of that. So it would be, if you were just doing the treasuries, it would be buy the 30, sell the 2, right? So anybody that's trying to put that trade on is like, the 30-year is going down and they're getting slaughtered. So like we are getting steepening, essentially what's happening is we are getting steepening, but the way that it's happening is so perplexing that like it looks like some people are like stopping out hard. Is footprint for you technical analysis? Okay, that's actually a good question too. So if I come in and I look at the chart here, okay, the footprint and volume profile are, you know, kind of, they're different things, but people make the same mistake with them. Okay, so I come over here and here's what most volume profile analysis people will do is they'll say, okay, yesterday the point of control in the treasury was this spot right here, and so we think that because of that, and we're within yesterday's range, that yesterday's point of control is going to be a magnet, and we want to go short on the theory that it's going to go back to that, right? That's technical analysis. You're using past information to predict which way it's going to go. And the reality is that once the liquidity is healed, and that's especially true when it's like a new day, there is nothing important about that price. Absolutely nothing special about it at all. There is no empirical evidence to really suggest that there's anything special about that price. So like, that's technical analysis, right? You notice when I come in here in the morning and I go through my thing, I don't point out, you know, value area high, point of controls, anything like that. All I care about is, did we move up or down overnight? In other words, were there large meta orders that moved us overnight? What might have been driving those meta orders, and how might that affect meta orders that we might potentially see today? Right? Now, and on a footprint chart, yeah, I can look at market orders. You know, a footprint is very similar to the DOM. Okay. So if I can just come in here in the DOM and I can say, okay, like, look, I can see that they're selling. When they sell, they actually like fall down really easily. So the order flow in all three of these is auto-correlated to the downside. Okay. So we're definitely selling, right? But when I sit down and I say, okay, but if the number is high enough, that means that they're going to continue selling. Now I'm doing technical analysis. Or if I say, but there was a really big number here, so that means that it's going to do something special. Or like the way that the footprint chart guys would do is they would say, they only traded like 4 contracts here, and then they reversed back up. That means that this is an unfinished auction, and at some point they will come back down to that location. That's what those guys do, right? It's that's technical analysis. It's flawed. Hey, if the previous day's volume doesn't matter, then who moves the markets? The long-term traders or the short-term traders? Okay, that's a good listen. You're asking good questions, really. Every order moves the market. Every order has an impact. Every order has an impact. So, who moves it? Short-term traders or long-term traders? I don't even really try and think of it of like, you know, what time frame the traders are, or you know, because there's like some guys, these work on daily bars, and these, and I don't think in terms of that. All I think in terms of is there's going to be a guy, and I think that he's going to buy or he's going to sell, and here's how much I think he's going to buy or he's going to sell. And like, there might be conflicting trades, right? But sometimes I can sort out, you know, which one ultimately is going to be stronger, and which way the flow is going to go because of that, right? So like right now, the determination that I made was that the order flow in the outrights is probably going to be so confusing that I might not be able to do anything with it. So I made the decision to go in on the spreads instead. And you see, like, it's working really well. The moment it's working really well. Because even though the outrights aren't really going the way that I expected them to, and the pressure is on the wrong side of the curve to what I expected, they are steepening, and so I'm making money off of the steepener, right? So don't think of it as long-term traders or short-term traders, but instead think of, like, why are they trading, okay? So like, is this guy trading because his fund has to be rebalanced at the end of the month? Is he trading because he had a position on that's losing money and he needs to get out of it, right? Is he placing those orders because he thinks that news means something consequential to the market that predicts which way we're going to go in the future, right? Those are the sorts of things that I want to do. Is it because of options flow? So I want to look for predictors of order flow, essentially, right? And those are the things that I'm going to care about, right? So you can kind of build a model in your head, and you can say, okay, like, here's the market. We got the market here. Most people say, oh, I'm a trader right here. Here's me. And I put orders into it and I get orders back. Right. And And I can just say, okay, based on what they gave me, I can submit orders in, and then I should make money. This is the black box approach to markets. That's technical analysis. It doesn't work. Okay. But what I can do is I can come in and I can say, oh, there's all these different people. There's all these different people, right? Here is a CTA. Here is a risk parity fund. Here is a speculator, right? And then I can say, what are these guys all going to do? They all submit their orders. And then those orders get matched. That comes back out. That information not only goes to these guys, but it also goes over to these guys, which are like producers and manufacturers. And there's all these people, right? They all get the price. And then based on those changes, they submit a new set of orders. But then these guys are also watching these guys, right? And then I'm also watching these guys, right? And it's this whole complicated system. But there are some situations where I can get a really strong idea what one of these guys are going to do that is going to be enough to make money off of, right? Predictors of order flow. I'm trying to predict what other people are going to do. Do you know where we can see Fed repos and stuff like that? So it kind of depends on the specific piece of information that you want to see, because I think a lot of that information is like on the New York Fed's website. The spread on the 2 and the 10 has kind of been going a little bit sideways, but the spread between the 10 and the 2 has been pretty consistent here. By the way, are we to the last? Okay. So like here is another example. Okay. We're coming over to the chart. I like to note these points because I should expect to see some order flow here, but it's just, remember, this doesn't tell us what's going to happen, right? The last significant low in the treasuries was around 119.24, and they're eyeing that right now. So does that tell me that we are more or less likely to trade through 24? Or even more or less likely to touch 24? It doesn't. People think that it does, and people will try and produce all these sorts of stats for you to show that it does or it doesn't with a certain percentage chance. But they're probably not using enough samples. And the reality is that when you look at those things from like a more advanced statistical perspective, those don't provide any edge for you. Okay? So I'm going to keep an eye on that price, but I'm not going to try and make a call on whether it's going to go through it or not, because I don't have anything that tells me that it will, unless I have an idea that there's really big meta orders and that the amount of orders that are going to come through is going to be more than enough to push it through 24. In this particular situation, I'm not so sure that I do, to be honest with you. I mean, like, we have been selling, and I could see the scenario where that selling continues, but I don't really have a very good idea of how much more selling we could ultimately see. I think that we could continue to see the yield curve steepen, but kind of funny. I think we're gonna see the 10-year move up and the 2-year move down, and they're gonna converge somewhere around like 2.9. That's what I think is kind of going on here. But there was some aggressive puking there. One thing that does happen is when you come to those points and then you go through them, there's usually at least a few retail traders puking into it. I mean, that's only good for like 1 or 2 ticks, but is a thing that happens. Is a thing that happens. He's still going. This downtrend in the 10-year is turning into significant amounts. Man, I think a lot of viewers really didn't like being told that technical analysis doesn't work. Was either that or there was a bunch of the other ones of you that have heard that spill before, and so you're like, oh, I'm not that interested in that stuff. And the treasury's going here. Hey, that time the 5-year saw a little bit more heavy-handed of a move, but like, look, even if we give up some of the spread, we got a decent profit here. We have that conversation every day this week, it feels like. The technical analysis doesn't work one. I probably mention it at least once per stream. I mean, it probably does hurt the stream to some extent because the person that is interested in watching a day trading live stream is the person that thinks, I should become a day trader. All I have to do is look at these charts and understand these patterns and follow this pattern every day, and I can make money. And so when Seth comes in and says, yeah, but that doesn't make you money, you know, that they don't like that. Look at this thing, man. Okay, so let's just point out, by the way, okay, they did come up to that pivot, right? They flew through that so fast. I mean, you look at the volume profile, it's hard to see, note if that's even matters. I continue to see steepening, so that's working out for us. I am kind of wondering if I should bail on the one side of this. Try trading in illiquid markets without technical analysis using only the price. Well, but that's exactly what I'm doing at the moment. I don't know, man. There's only a 1 lot there. I mean, does it get any worse than that? I wish I should have taken that one. Here, I'm gonna put it out here again. Nope. I'm like, what I'm saying now is like, I want to bail on one side of my spread because this is looking like it's turning into a really aggressive trend. I could just keep it on, right? But the reason why I was looking at that was because it looked like the spreads had come in the 2-year and that they were going to give me a better exit on the losing side of the spread than I would, you know, could otherwise get. But I'm willing to put that lot out there if they hit it, but I'm kind of wondering though, like back when it was like minus 15 or something like that, maybe I should have given up on this. I probably would be up a lot more, right? 24 was yesterday's close and 2-week VPOC as well. Yeah. But like that's kind of the whole thing, right? Is I would expect, I can't predict what is going to happen if they're going to go through it or what, but I would expect to at least see like a little bit of trade and people trying to make those kinds of predictions around that price. But we didn't see that at all. They went right through it. They're like, nope, doesn't matter. Nobody cares. Oh man, even the 5-year is getting slaughtered now. So like the yield curve did steepen as I expected, but it got to the point where the 2-year was like the 5 and the 2-year are pushing lows of the day too. So I don't know what you do with that. I don't know what you do with that. Now, now this is interesting because the S&P 500 is rallying pretty aggressively as interest rates are rising here. So I'm wondering if they're reacting more so to some extent to the S&P 500. Yes, because this hard turn south in the treasuries and especially on the 30-year end of the curve very much correlates with when the S&P 500 turned up after about 940 and turned up. So that's a really interesting thing to note. A technical analysis works with the right approach. You don't have to do it badly. Order flow is not the holy grail. It's just as much a tool as a technical analysis. Well, no, you're right that order flow is not the holy grail, because if you look at what I'm saying with order flow, you know, what I'm saying in order flow is, one, I can identify some conditions that might increase or decrease volatility, and two, I'm using it as a confirmation because I'm trying to predict order flow, and so looking at the actual order flow is just, you know, helping me verify that my predictions are correct, right? But what you're saying here, technical analysis works with the right approach. Now, this is an interesting thing to talk about, because the thing is, hold on, I'm kind of wondering if I want to, yeah. Oh my. What is going on here? Okay, Seth, I'm gonna try and focus here, and I'm gonna try and talk to you at the same time, okay? The market is more statistically efficient than it is informationally efficient, okay? So you could have some guy rebalancing his portfolio, could move price way far away from where the fundamentals suggest that they should be, right? But it doesn't take very much for somebody to come in and, you know, if you found a statistical aberration in the market, it doesn't take very much for you to remove that statistical aberration out of the market. But that all suggests you could make money from technical analysis, right? Does what I just said there suggest that it's possible to make money from technical analysis? It's just very, very hard. So the thing that I would say is that if you are going to trade from technical analysis, you're going to want to have something that strongly suggests that you have a real edge, right? You want something that strongly suggests that there's a real I don't like the way that I said that. I had a little bit of a brain fart there because I decided to get out of that position. Okay. If you're going to trade technical analysis, what information do you have that says that strategy works? And what most retail traders do is they come in and they say, okay, I'm going to test this particular setup that I've seen over the last month. And then that says, oh, you got like a 55% win rate on it or whatever. That means that it's a profitable trade, right? That's what we do. And the problem is that markets exhibit fat tails. So if you have a strategy, especially if you have a strategy that say, most of the time you win, but when you do lose, your loser is larger, right? So that sort of thing happens, or that sort of thing is popular, rather. In other words, your stops are larger than your targets, okay? Then what you're doing is you're introducing kurtosis into your results. Just think, okay, when you're looking at a distribution will look like this, right? This is more of a normal distribution, and this is kind of more of a fat tail distribution. In other words, more data points are in the center, but there's also these outliers are larger. These tails go out further, okay? Fatter tails, right? So if you bring this in by having a really small take profit, what you're doing is you're increasing the kurtosis of your strategy, right? By its very nature, when you have targets closer than your stops, you're increasing the kurtosis of your strategy. That's what that does to the statistical distribution, right? Do you see why that is, right? I'm putting more days. If I look at how much I make at the end of the day, and you have more days where I make a small profit, but there's going to be a few days, they might be less in number, but the few days where I make a ton or I lose a ton, right? So the problem with this is that because these outliers are so far out here, these right here could ruin you, right? These could just make the strategy outright unprofitable, or probably more commonly, this could be larger than the amount of money that you have in your account at the moment, right? So you've got to know what these do. But because they're rare, you're going to need more data to see them, right? And what they have found, and there's some math behind this that I don't understand, but this has been proven with math, that basically the number of samples that you need to verify a statistical distribution increases exponentially with the amount of kurtosis. Okay? In other words, most retail traders that are trying to trade off of technical analysis are trying to do something that they would probably need 10,000, if not 100,000 trades to really verify if it works. And somewhere in there, you're going to have some drawdown that might be really ugly, right? So, yes. Can you find an edge in technical analysis? Yes, but the bar is so much higher than what most people think it is. And so here's the argument that I'm really coming back down to, okay? Yes. Can you make money from technical analysis? Yes, but it's not worth it. The amount of effort that you have to put in to really truly find something is just insane. And meanwhile, you could be over here looking for the informational inefficiencies that exist in the market that are just laying everywhere all the time. And like once you start to focus on informational inefficiency and predicting order flow, it's like it's a completely different world. Because you go from every day, man, it seems like I'm doing this strategy, I'm doing the right thing, and it's not working out for me. What the heck is going on? Well, I guess that's just what this strategy is doing right now. Does this strategy really work? Did I really do my homework? Why did I think that this was going to work? And you start going through all of those mental games, and they have all this stuff about, well, you got to trust your strategy, and it's all about the mental optics and everything like that. The stuff that the psychology guys go into, right? You go from that to, I know what this is supposed to do. I have something that's going to predict what the orders are going to do. And if the orders don't do what they're supposed to do immediately, then I'm wrong and I just want to get out, and I just bail on the trade. So you go from this world where it's just like, it seems like it's so hard all the time, to when you're making money, you're just gonna smack it out of the park. We made a trade on Tuesday that we made like 100, 200, 160 bucks on one trade, right? So like, if I look at my stats for the week, I have like an 80% win rate, and my winners are significantly larger than my losers. Actually, let's come and look at the stats, because the stats for this week should be insane. Let's see what I can look at. You get what I mean? So yeah, you can make money, but the question that you have to ask yourself is, why do I want to trade this way as opposed to this way? Because I'm just telling you, based on what we know about the market, it's going to be easier for you to make money from informational efficiency than it will be from statistical inefficiency. Maybe I should have kept that trade on there. How much would that have been on this side here? I kept it on. I got out 822. That wouldn't have been too bad. That would have been another 10 bucks. That would have been worth it. That would have been worth it. But I am seeing, I don't know, this is getting a little weird, to be honest with you. I did see something. So the reason I got out was I started to see liquidity hole form. So I decided to bail. A lot of the time when you get a liquidity hole like that, it will go further and then it will snap back. So that might still be the possibility. Is like, I might have been able to hold out for another $10, but I should be getting out now. But that might not actually be what happens. So I don't know. Let's just continue to look at it. Yeah. Where's the one where I made like a ton of money though? Oh, that's weird. Was it not here? Maybe it was last week. That was last week. Okay. Actually, let's go back even further. So I think I can go from here to here. When was the first day that I traded it? The 28th. You're going to get EIA number here, by the way. Well, I'm trying to think of what would be the best way to show this. Let's just do it from here, because this is when we really felt like we understood. So we just go for this month. Okay. Okay, so I've only taken a few trades. It's a super small sample size, okay? But like, look, I'm hitting 50%. I'm hitting 50%, and my MFE is 3 times my MAE. Like, look at that. And honestly, it was only like that because I had one trade that was like quite a bit back. But like, look, other than that one outlier, it's like I'm losing $10, $20 and I'm making like $50, $60, $70 on trades right now. Now, unusual market, not typical results, extremely small sample size. But Do you see what I'm saying? Like when you know that you can really go for it. You get what I mean? And the mental game is completely different at that point, right? What is the mental game now? The mental game now is being in the zone, knowing what the market is doing or is going to do, and knowing when you know and being able to be confident about it. And knowing when you don't know and staying out, right? And that's the mental game that you have to play with yourself. And that is much more like, because man, some of the stuff that these guys talk about with technical trading is like, well, actually what you're doing is you're self-sabotaging yourself, and there's all these sorts of mind games. That whole thing is just kind of like, okay, like you have fun and you go and deal with that. The mental game that I play is, what do I got to do to be at my best? Right? And that's a hard game. It is a hard game to play, but I know how to do it. It's like, I got to go to sleep on time. I got to do my research. I got to get adequate rest and relaxation during the day, you know? Is this it for today? Reversal now in the ES. If they really reverse, then that was amazing. Stop hunting. I am kind of starting to wonder if the S&P 500 is starting to say that there's something fishy going on in the treasuries and they're turning around. I did get out of my trade a little bit too early. There was another $10, $15 available in it. There still is a possibility that the treasuries kind of balance back out here per se. Like what I'm seeing right now is that they are pushing really hard, and I am starting to get like erratic flows from it. So like when I start to see those erratic flows, that doesn't mean that it's gonna stop. I certainly wouldn't take a trade off of that, but it can be a really good place to exit a trade, right? So I got out. I think I'm okay. JF Horton, do you trust the data on Jigsaw? Yeah, why wouldn't I? So I don't know if this is what you're getting at, JF, but one of the things that kind of happens that's a little weird is that the market order feed and the limit order feeds aren't completely in sync with each other. So there could be a situation where, you know, if they're a few milliseconds different, that some orders could be classified as buys or classified as sells incorrectly. Now, if I was in the stock market, okay, and there was a big spread and there was constantly orders going off like in between that spread and stuff, then that would be like a big problem, okay? But here in the 10-year treasury especially, it's not really a significant factor. Okay. Yeah, we did have a little move higher in the steepener, so I could have made more off of that trade, but I don't know. It was starting to make me nervous. This move overall is kind of making me nervous. Just because of what I feel like it means for the broader market. Like, look at this. I mean, are they going to come down into here? I don't use these levels to try and make a prediction about whether we're going to go up or down, but they make good benchmarks, you know? They make good benchmarks, and if they went to down into here, that could be really ugly, you know? And what if the treasuries decide that they're going to continue to go lower, right? They're going to start retracing the move from like July 2021 and everything. That's like, oof, man. Because what does this say about the broader market? Well, it says that interest rates are going to do what the Federal Reserve wants them to do, even if the data doesn't necessarily justify it. And that could increase the chances that we go into a recession, even though the equities are rallying at the moment. That's what I'm worried about right now. Man, that just keeps going. I feel like it's forcing me to get in, but I think I should be done for today. So we got about 30 minutes left, so but this is trending like insane. Yeah. So here's another thing that will happen is like you predict an order flow successfully, right? And like there, if it's a really strong order flow, there can become this point where things just become really disjointed. So if you have a winner and you let it run, you can really get some amazing swings off of it. But your ability to actually predict how far it goes is actually quite diminished here. So they are pulling back to 16 here. But what I'm worried about is that they'll come back to 18.5, right? Let's see. I could have kept the spread on though, because I started taking the spread off over here. Actually, you know what? Well, I made 20 bucks today, which is about average for me with micros. And having made 20 bucks on a spread trade is really cool. That I pulled that off correctly. But probably there was another 10 bucks. Probably if I had, well, actually I take that back. If I had done this properly, if I had gotten a better entry on things, and because really what happened was I went long the 2-year, or sorry, no, I went short 2-year rates is what happened, right? I went short 2-year rates and it went the wrong way. It went against me. So I hedged myself by turning it into a spread trade. That worked. But if I had from the very beginning said, well, I just want to take a steepener here and had picked better prices, then this trade probably could have been a $45 trade. So, because I lost about $15 off of the initial thing. Just did not get a very good position in on the 2-year. And then the 10, I got out on my exit at least a basis point early. It's kind of lame. I'm doing really well, but there's not many viewers today. I'm going to put in today's title, though, Successful Steepener. That was a bear steepener. You see, it is. I'm very weary about a significant pullback, but at that move right there is kind of giving me the no, I'm just going to keep going vibes. Like the volume that I'm seeing selling, there was a significant buy in the 30-year, but the volume seems like it's just still going. And man, I don't know. This is wild. This is turning into a wild move. This is turning into a wild move. I mean, we were like what? We were 275. So this is now 10 basis points today. Yeah. After that PPI, the 10-year yield has increased 10 basis points. You really could not get a bigger divergence between what the fundamentals from that economic number suggest should happen and what actually happened. Like, you told me at the beginning of the week that inflation numbers are going to come in well under estimates and interest rates are going to rise. There's no way I would have believed it. There's no way I would have believed it. This whole move that we're getting here today is wild within that respect. Yeah, someone is getting blown. Probably somebody is getting blown up, huh? Well, so here's something else. Hey, NASDAQ, how have you been? So here's something else that's been happening. Is like, if I come back and I do the volume profile, okay, so we can kind of think back on some of this stuff. Do you recall when we were saying interest rates should be rising? And I think that we were saying that a lot through here, right? And through here, right? And it was like, they're not really rising that hard. It was like, they can't get below here. What the heck is going? And then things, there was a little bit of market panic, and we had this really strong move back up where everybody said, oh, the Federal Reserve is going to pivot. So it's like the Federal, and then even here on this move right here, right? There was this was where the Federal Reserve said, no, we want interest rates to be higher. And they fought it, right? So this whole time it's been Federal Reserve, we're going to raise interest rates. Market, we don't believe you. Market was fighting them, right? And now today, something about what happened yesterday and the continuation through on today, it is those guys capitulating, I think. I think the market is capitulating to the Federal Reserve here for sure. That's not technical analysis at all, right? Because what we're doing is we're calling out the moves. Actually, something that I should be doing that I haven't been doing a very good job of is like, we should be coming in here and saying, okay, this was CPI, right? I'm gonna put the original price like right there. Okay. And what was it? August 2nd was no, it was the 5th. 5th was non-farms. So blowout non-farms, right? So what we're doing is we're just trying to trace the past order flow. There was a large meta order Y, right? FOMO everywhere, it feels. I'm feeling a little FOMO-y because I got out at like 822, so I feel like I could have done that trade a lot better. It is giving some signs of like that they're going to have to back off here again. I think you're right, though. I think that somebody in the 30-year like puked hard. I think that there was somebody that like they were saying, Yeah, Federal Reserve is going to pivot, and they held on to it somehow, and they're giving up now. They're saying, yeah, okay, interest rates are going to rise. I'm a little confused. I'm wondering. So this morning, the view count on the stream has been a lot less than it usually is, but it's so right now it says that I have 5 viewers, which is like silly. But there's more than 5 of you talking, so I don't know if that number is accurate. I don't know what's going on there. It's kind of weird. Let's see here. In the CB has heavy put open in the rights are under heavy pressure. Some or just YouTube. Oh, I'm sure that people left, but just a little unusual, I think, because like for instance, we got just people that have spoken recently: Sharp, Tobias, Sergey, NASDAQ killers. 1, 2, 3, 4, 5, Horton 6, Paul 7, and then the guy that we were arguing with earlier, Sergey, 8. Well, now we're up to 8. I don't know. I think we've had more than 8 viewers, but I don't know what the deal is. Like, the total number of views is lower too. It's like YouTube is just like, we're not going to recommend you to anybody anymore. You should make sure well, and we have 8 likes too. If you haven't hit the like button, make sure you hit the like button, because today was actually a very instructful day for us putting on a spread trade. Big technical analysis is trying to keep the man down. Why wasn't the inflation? Okay, so let me reiterate that point, because this is the sort of question that you'd ask all the time, right? NASDAQ killer. The numbers that we just got, the inflation numbers that we got, suggest that inflation is cooling, but interest rates rose. That makes no sense, right? So why is this happening? Because the Federal Reserve has said that they're going to need to see multiple CPI reports, in line with cooling inflation before they back off of raising interest rates. So the market is essentially ignoring the fundamentals and selling because of what the Federal Reserve has said. That's what's going on. And I do think that some of it was driven by equities being really bullish. They were saying, well, the equities can't get too bullish because that could bring inflation back. So the rates are going to need to rise again. But clearly, the treasury's accelerating here beyond what just the equities did. So probably somebody stopping out really nasty here. Oops, excuse me. Man, that really made a loud thunk, didn't it? Yeah. So we are getting some really strong signs of a liquidity hole here in the 30-year. And that might be, if I had held on to that trade, I got to be getting out now. For sure now. If I had held on, I would be exiting, especially since I'm about to go. And I don't think that I'm going to leave that one on all day. I think that what we're seeing here in this market, because of the dichotomy here, I think that this makes it difficult to try and hold a trade. You know what I mean? To try and swing a trade. I think that we catch that move and we're done. Selling's yen, it's heading for highs in NQ. Well, the S&P is down about 20 points from its highs. I'd say equities still look quite bullish though, don't they? Somebody I'm wondering if it's, you know what, it was JP Morgan were the ones that were saying that the Fed was going to pivot, right? The JP, that's the one that's bailing here, or JP clients rather. Goldman Sachs crude oil demand is rising from here. 92 is not a bad place to go long oil, I think. Oh, that's right. Oh, that just makes it even more interesting. I totally forgot about a really important piece of information for us here trading in the treasuries, and that is that there is a 30-year auction today. So is the 30-year auction going to go bad? I wouldn't be surprised to see treasuries, you know, rise back up though if after the 30-year auction, because the tendency is you'll sell before and rise in after it. I mean, usually you rise all day, but there's a tendency to rise after the auction. Okay, that is right there with the treasury touching 16 again. That is for sure, like, that would have been my exit. So I didn't execute very well. I mean, there's a lot of luck in that. Could have executed that a lot better, but I still made money and it was still good. It was still a good trade and everything, so I shouldn't complain too much. I'm feeling really good lately because I understand this market okay. there are points where I'm confused, but I think I understand what's going on here in the treasury market. Okay. And I've been executing on it way better than I have in the past. I caught like a really big winner, and even the ones that where they didn't really work out for me, I was able to keep small, and you know, I've dealt with that well. So I'm feeling really good about my trading. You know, for a long time it was like, well, I started taking this approach, but it's a little bit newer and I wasn't quite zeroed in on it, and now I feel like I'm starting to get there. I didn't trade the big contract, but what I did, Nasdaq killer, was I tried going short the 2-year, and that wasn't working out, so I decided to come over and hedge myself in the 10 and turn it into a steepener. And we saw the yield curve steepen quite a bit, and so I was able to make a decent profit off of that. And then at some point, I canceled the losing side of the spread once it became clear that this is just turning into a bender move. And I could have held this a little bit longer, so that's where I was saying I should have made more, but I did it with micro spread trade on micros. But that's the first time where I've done a what would we say, like an intraday trade in the spreads, and it worked out well. So I think that was an important, that was a big step for me, and I'm glad that it worked out. I'm kind of sitting here thinking that there could be continued steepening between the 2 and the 10, but I want to see this move rebalance here at the very least first before I'd get involved in it. So, you know, we'd want to wait until 9:30, probably 9:30. Maybe we could see more, but for me, it's time to go. By the way, was the music awful? I know, that's another thing I wonder, is like, did nobody want to hear the hype music? I understand, guys. This market's got plenty more in store for us, I think. So, and it's going to be rough trading. It's going to be difficult trading, but I'm doing well. I think that we can handle this. So, I think we're prepared. I'll see you tomorrow. Stay profitable, friends. Or at least don't blow it all out.